How we all doing? I'm back. Morning Neo, morning ladder. Back for another week. Well, back permanently basically, but finally. Seems like I've been away for ages, but it hasn't been. It's only been a week. How's everybody doing? Everybody make lots of money last week? It's pretty up and down last week, but I managed to bank 6.5% last week, which is pretty good. It's a decent movement, which I'm quite surprised about considering it's summer months, normally quite flat. Morning Diamond. Morning Fabio. So I can run through all my trades if everybody wants from last week. There's not actually that many actually. It's from there to there. So where are we? That's all I closed last week. All that lot. So there wasn't actually a massive amount that I closed because I'm just managing the positions that I'm in basically. So I can go through those. I might just quickly whiz through those just so everyone can see what I did last week basically. And then we'll have a look at the charts, go through all the pairs, usual stuff, have a look at the news. And basically see where we are. Had a great week, cool. Yeah, it's quite, markets have, although it's quiet, we've got a lot of sideways action. When it's moving nicely. We're getting some decent pushes on days when the market's moving, but it is a lot of sideways at the moment. So you've just got to be patient in the summer months. It's really frustrating position trading summer months. This goes on until kind of September. So we have a good sort of 6 weeks or so of very flat and spiky movement, but nothing you can do. Happens every year. Morning, Shalk. So I'll quickly recap what I did last week to start with. Oil. There's a trade in there somewhere. Where's that? That one there? Oh yeah, it's last week, sorry. So that's from there, Monday. So yeah, took one off of oil there. Oil's been pushing down gradually against me all week, so that's the only thing I banked on oil. Pound US dollar, banked some of those. Let's put all those up there. Loads of action on the pound US dollar, as you can see. So I've been selling the pound US dollar, but you know, as I say, it's sideways. Very, 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 very sideways. So the key to summer trading is to get out fast, get in and get out. Morning, Trevor. Morning, Stevie. You need to be keeping the entries fairly close together, sort of half an ADR really, and just getting out regularly, and then adding them back on. So you can see there's quite a lot of positions there that I've taken off, but the movement, the actual movement, all of those trades were taken in is kind of 280 odd pips. So it's 2 ADR moving in a week. So morning, Sammy. So yeah, quite tight movement. So banks load that. Swiss yen. I'm just about to get out of the Swiss yen. I'll show you in a minute. So all that Swiss yen banked. I just banked one this morning. So what's the time? We've got 6 minutes to the market opens. So yeah, all this Swiss yen, banked all this lot. Quite a lot of that last week on the push up. So scaling in as we push down, and now they're profit taking on this move. I'm about to get out of it. This position was my initial trade here. That was my very first entry on this one. I got out at break even on that one this morning. I didn't actually. I got out with a $20 loss because of the commission and swaps. And I've got this one on at the moment, this one position here, which I've got to stop, which I'm going to trail on the hourly basically. If it continues to push today, I'll trail this up, but I'm getting out of the Swiss yen. I've got a feeling, I don't know, I don't trust the Swissy at the moment. I'll go through that when we look at the pairs, but sorry, I don't trust the yen at the moment. but we'll have a look at that. Swiss yen, US dollar CAD. So I got 3 off of that. On there, so there's 2 positions taken off there, and that big long one up there. Can't even see that one; it's so long ago. Look, but yeah, you know, this is what I mean. You know, we've been sideways for 3 weeks now on this pair. So just literally add it, get out, add it, get out, add it, get out, and just keep doing that all the time. It lets you. Pushing down at the moment, so I'll add on again down here, and then hopefully we'll push up. So Friday on this, obviously we broke these highs. So I'm expecting a pullback and a push at the moment. And the only other thing was the DAX. Why did I take a DAX trade? No idea. Took a DAX trade last Thursday. Why did I take a DAX trade last Thursday? Can't remember. I was on holiday. Anyway, last Thursday morning, I took a DAX short. I've no idea why, but I did. I probably left to look through the Telegram group to see why I took that. But anyway, so that's everything I banked last week. As I say, pretty good week, 6.5%. Closed out Swiss yen. So Swiss yen, to quickly start off with positions. I mean, are exactly the same as I've just shown you actually. So Swiss yen. I'm going to get out of this one. So we've had a decent push down on the little bit of weakness on the Swissy after the push and that big yen strength that we had. So started scaling into that for the pullback. Much clearer on 4 hour actually. So basically it's a pushback down to the 72, perfect bounce off the 72. So scaled in all the way down to the 72, a lot stronger than I was expecting it to be, but we got down there. Powered through all of the support that I had drawn, and now we're pulling back. So the reason I'm looking to get out of this is if we are starting a new leg, and I'll show you, it's obvious, should be obvious. Well, maybe not obvious, but got high, low, lower high, lower low. Market structure is gradually shifting to the downside, which means yen strength. So I am looking at this at the moment thinking, right, this final push, we are coming up to potentially the end of it, 71.8 retracement, 71.9. And we are also coming up to this potential support here. So that was a lovely support, and obviously support turns into resistance. So if we're going to start next leg down, this is potentially where it may get to, where we just run out of steam. We're going to run out of buyers, and then the sellers that started this move are going to start the next leg down. So that's why I exited that one at pretty much break even, and I'm just trailing this. If it's going to continue up, then brilliant, that's fine. If it's not, I'm going to get out. Because we're extended on the 4 hour as well, so we're just getting very tired on it. So Swiss yen, I'm looking to get out of that completely. Reminds me, I just need to take the EA off. So I'm just going to turn the EA off, get rid of that one. Oh my god, my VPS provider upgraded their VPSs at the weekend, and I don't know what they've done, but everything's gone into 4K mode. So the text is tiny, and on normal Windows PC, Windows 10, Windows 11, if you're running 4K, you basically just go into the scaling and turn off the scaling options. There's no scaling options on a Windows server. So you can't change this, which I've just discovered, which means it's very difficult to see everything. So everything's just tiny. Look at, I mean, you see the size of the, can't see them up there, I don't think. See the size of the close, the icons to close and minimize. They're absolutely minute. So yeah, I don't know what they've done to the server, but it's a pain in the backside. But anyway. So yeah, Swiss yen, I've just disabled the EA on that, so that will stop taking those trades. Morning Co. US dollar Swiss, we'll have a look at that in a minute. Said you were going to start building a short position. Oh yes, right, okay. DAX, yeah, I probably said I was going to start building a short position. And all I did was get out of it. Yeah, sorry, of course I am. Yeah, I'm in a short. Oh, that's why I took that off. Because I am in a short position on the DAX. Good job you reminded. Good job you know what I'm doing, Diamond. Yeah, so I'm shorting the DAX at the moment. That's why I took that trade. Because obviously you looked like a scalp to me. I was thinking, why would I be scalping on a Thursday morning on holiday? I should have been in the pool. But yeah, I've started a short position on DAX. So I don't normally trade indices. Position trade indices, but we'll have a look at them all in a minute, but they're all very nicely extended at the moment. So pound yen, we'll have a look at that. I am short Swissy, cool. Yes, Forex machinist, yeah. You confuse me with everybody with their different names on YouTube and Telegram. Right. So, yeah, well, that's what I've got on at the moment. I've got a short on the DAX. I'll quickly show you those positions. So, Swiss yen, DAX, building a short. So, we're very extended. The thing that worries me about the DAX is support resistance. Let me just turn the crickets down a minute because a little bit loud. Market's open. Actually, I'm not going to. I'll just move those out of the way because I'm not actually doing any futures at the minute today. So don't really need them. So yeah, DAX. The reason I liked the short here and started to build the short here was because I was expecting them to reach up and do this gap fill and go. So we had this gap, this big gap on DAX, and gaps get filled. So this gap got filled. And it happened to coincide with the 72, and it happened to coincide with the previous area of support, which is likely to turn into resistance. So this is a really good level right now, potentially, if we're going to start next leg down. The danger with this is if we don't start next leg down and we break back above this high, there is nothing coming up until 143.18 up here. So this is the next level of potential resistance. So we've got a hell of a push up to there if this isn't the turning point. So it's a fairly dangerous trade. The bulls have been in control now for 3 weeks. 4 if you count this one. That's kind of a flat week. But yeah, bulls have been in control for 3 weeks now. In a obvious downtrend, entering a recession coming up with inflation going through the roof, etc., etc. The reason the bulls have been in control is because we've had earnings fortnight. So obviously people have been buying up a lot of stock. Earnings fortnight is now finished. So we will probably have the next leg down start to commence. How quickly that's going to happen is going to be difficult. But you know, it could happen very, very, very fast. We climb up the stairs and we fall down the elevator shaft. So I'm hoping we're going to get a fast move down. But my plan is basically, if we can get this forming as a kind of head and shoulders here, is basically just to, you know, profit, get in, and we'll start riding the market structure down as it starts the next leg. So yeah, that's the DAX. I'm in that one. Swiss yen just about to get out. Pound US dollar, I'm still in the sells on that one. As you can see, I've been selling the hell out of it for ages. Every time it pops, I'm selling it. We've got a 4-hour reversal alert now, which we got last week. So looking potentially for a push back up and drop. So we go high, low, lower, high, lower, low. So pound US dollar, still happy short on that one, although the US dollar's got way, way, way less strength than I was anticipating. Slightly worrying the US dollar at the minute. And US dollar CAD, I've got the longs on that one. We've broken structure. So looking for it to come down and retest this accumulation, this area of balance here, and then bounce out of that area of balance and test new highs, obviously depending on what happens with the CAD. And I've got oil on. Oil, I've got 4 on at the moment. It's moving very nicely this morning. As you can see, I've been buying oil over and over again. Every time we push down, buying oil, buying oil, buying oil. 90 to 95 a barrel is where I think the sweet spot for buying is. We broke down below that last week. So we got down to sort of 88, 87 we touched on, which is very low. So yeah, love it down here, oil. To the moon, basically. As long as we keep having conflict, if if China decides to invade Taiwan and then move on to Japan, all the better. Oil prices go through the roof, indices go through the floor when there's conflict. So, yeah, that's the forecast. Speaking of news, nothing much going on from a news perspective over the weekend. Just usual chatter from the Fed. The Fed is getting more and more and more bearish every time it's saying something at the moment. Now it's like, yeah, we're not quite doing as well as we thought we were. And the US dollar is not really as strong as I was hoping it was going to be. So we don't have a dominant currency at the moment. Morning, Themba. So at the minute, there is no dominant currency that we can say, right, we need to be doing this on this currency constantly. So like with the yen, we've been selling the life out of it. The US dollar, we've been waiting for the US dollar to power up. It's not powered up. It's basically just gone sideways. So there is no dominant currency. Every market, every currency at the moment is squashed. And there's no real direction that we can say, right, you just want to be long in the US dollar. You just want to be doing this to this currency. So everything at the moment, you want to be selling the hell out of it. It's just all going wrong everywhere. As long as it keeps moving in structure, you can kind of take any currency in any direction at the moment. I've got no real bias in any direction on anything. Pound I'm short on, euro I'm short on, yen I'm short on. The Aussies and the New Zealands are kind of sideways, unsure. The US dollar was the only thing that I was really bullish on, and I'm not very bullish on it now because the Fed is just treading on eggshells at the moment, not knowing what to do. So there's no real directional bias anywhere that I can see. So I'm going to stay with trend, and whatever it's been doing, it's going to do that or it's going to do that. So I only want to be looking for that on US dollar yen. And either it's going to go sideways and give me an opportunity to get in and out and in and out and in and out like this, or the trend is going to continue and I'm just going to milk it. So that's kind of my overall view of the market in a minute. Just carry on doing what it's doing. There's no reason why it shouldn't. So US dollar CAD entry buy. Yep, soon. Wait for market to shift. So this is the what did we have last week? Non-farm payroll on Friday. So it's just filling the gap at the moment. So yeah, I'll be buying again down here. Last entry was there. So what are we? 41. Yeah. So next reversal alert. Yeah, I won't get on that reversal alert, but if it pushes back down into here and we get a sort of W, then I'll get an alert down here, so I'll get an entry down there, US dollar CAD. But yeah, anywhere down here you can buy it. So quickly looking at news this week. It's nothing. It's awful. So today we've got nothing. Tomorrow we've got nothing. It's not often we get that, is it? Nothing. Literally, there is nothing happening tomorrow. We've got CPIs on Wednesday. We've got PPI on Thursday. GDP I wouldn't pay any attention to at the moment. It's got nothing to do with anything. If it comes out as better than expected, the market will likely go, oh, well, you didn't put up the rates fast enough, that's why. If it comes out as expected, the market will go, oh, well, you didn't put the rates up, that's why. So I don't think the market is going to have any reaction to anything GDP related from any currency at the moment, because GDP is a measurement of how well the country and the bank is performing. We know they're not doing very well. So no one's expecting GDP to come out great. If it comes out as not being negative 1.2 and comes out as negative 0.8, I don't think anyone's going to give a damn. So I wouldn't worry about that. University of Michigan is, I keep saying it, I have no idea why it's red. They basically interview a couple of hundred people and say, what do you think about the economic state at the moment, you people that are in a university, all 500 of you? Why it's red news, I don't know. But the market does pay attention to it. The analysts use it for some reason. It's never been one of the ones I've paid much attention to, but occasionally we do get market movement off of it. So literally this week, Wednesday and Thursday, we've got one piece of US dollar news. That's it. So there's no catalysts this week for any movement whatsoever. So it's a case of waiting for price action, looking for areas of support and resistance, and basically taking trades in direction of whatever positions you have on at the moment. So there's a lovely support coming up. If we start to get a bounce M5, jump in. There's no news catalysts to wait for until Wednesday, Thursday, and they're only US dollar related, so we can kind of forget news this week. Our ADRs, we've had one this morning on Aussie New Zealand. So yeah, the Aussies, the Aussies, I'm long Aussie New Zealand, have been for ages. Obviously I wasn't paying any attention to getting into new positions last week, but that was a lovely entry. Unfortunately missed it. The entry was there. Yeah, that's flying. I would be looking for longs, so I wouldn't really want to take an ADR short on the Aussie New Zealand. Monthlies, we've had US dollar yen hit. Nothing's hit on the weeklies. Obviously, it's first day of the week. That's all we've got there. Monthlies, we've got US dollar yen hit because it's pushing up very nicely off the back of the yen weakness, which we were expecting. So, but potentially we might get some yen strength starting to come through. And if we get yen strength, this is a prime example. When we get yen strength and you've got all other currencies which you have at the moment being a little bit neutral to bearish, as soon as the yen powers up, it flattens everything in its way, which is why I'm getting out of that Swiss yen. It's getting to the point where with all of these where we've had a decent push. The next little bit of yen strength we get coming through is going to cause a big move to the downside. So I still at the moment though like everything long against the yen. Because the yen has the pushes. It's a bit like the Swiss franc. The yen has the pushes, and then it just goes into I'm dead mode for a week or two. So it's a case of you want to catch it when it's down here. It's not going to be strengthening up. Kuroda is not putting anything into place at the moment that is going to strengthen the yen up short term. So I can't see any reason, or long term rather. So I can't see any reason to do anything but look for longs against the yen. But when it's extended, I don't want to be longing it. I want to wait for it to pull back and get in. But as I said, with all of these, market structure potentially is now shifting to the downside. So not necessarily because the yen is strengthening. I think it's more because everything else is weakening rather than the yen getting stronger. And obviously the yen is one of the big boys, and when it powers up, it powers up. We've got a lot of instability in Asia at the moment with China flexing its muscles. If they do try and take on Taiwan, well, not take on Taiwan, they beat Taiwan obviously very easily. But if they do, next step would be Japan. And the problem is obviously the US is kind of obligated to step in. So that is potentially a big conflict problem, in which case obviously markets will go all over the place. So got to be a bit careful with everything at the moment. So there's nothing really of interest at the moment on these. That's potentially of interest, but I'm much more interested in going long. Hourlies flat, 4 hourlies flat. So there's nothing to look at on the RSI extensions because obviously nothing's moving much at the moment. So we'll go through all the pairs and have a look at everything. Indices this morning, big push up on the DAX at the open. Lots of lovely wicks. So hopefully drop down today. But we'll have a look at those in a minute as well. Very good daily targets, good support and gap fill very close together on daily. We know about uni students controlling the market. Yes. Yeah. University of Michigan, those 500 people that get surveyed at the University of Michigan, they are what the banks listen to. Yeah, bizarre. But it is. It's if you look at if you went into a hedge fund or a prop desks analyst team, you would see on their scorecard, UOM is a scorecarded element. What I mean by a scorecard, if you don't know what a scorecard is, in big funds you have analysts, and the analysts gather data and pass it on to the traders, who make the decisions on long or short on a particular instrument. The analysts have a scorecarding system, so they will have a +1 or a -1 for different news events, or a +5 or a -5, +10, etc. Depending on what the news comes out as. So when CPI figures come out, instead of a 0.2, they come out as a 0.4. The analysts will go, okay, we're going to scorecard the US dollar as a +5 because it came out X percentage above there. So they will then have a US dollar scorecard, and whether it's a plus or a minus will indicate whether you go long or short and how strong your sentiment is on that long and short. Yeah, so they scorecard all the news events, and each news event has different weighting, etc., etc., etc. University of Michigan has a weighting on the scorecards in the analysts. So 500 students in Michigan actually impact what institutions do. It's crazy. But that's why I've kind of discounted this one, because you can't take the opinion of 500 students. Really, can you? Unless they're economics students, and the University of Michigan is the biggest economics university in the US. I don't know. Never looked into it in much detail, but anyway, that's how scorecarding works, in case you didn't know. So yeah, basically this is flat across the board on RSIs. So there's nothing extended from a mean reversion perspective at the moment to have a look at. There's a few things getting close, mainly to do with the US and the yen pairs at the minute, based on obviously that's what's been moving the most over the last sort of week. So we'll have a look through all the pairs. If there's anything anybody wants to look at in any detail, let me know, and I will do that. We're going to start off with the indices. So with the indices at the minute, obviously we're bearish. We know we're bearish. The reaction that we got off of the lows on the DAX has obviously given us a very, very nice bounce over the last sort of month. We've come up, we've filled in the gap from that initial tumble. So from a balance perspective, the long-term investment that was causing a P&L nightmare for people on that gap, as you would have had on that one there, is rectified. So potentially we see movement in the opposite direction from gaps when they get filled. So potentially this is where we will be looking for the next leg down. 72 bounce, we know the 72 is a good holding MA on the daily. So we've got a good opportunity for shorts coming in on the DAX, hence me being short on it after quite a lot of up days. See how many down days we've had on the DAX recently? Not many. Market's been fairly bullish. There's a lot of stock buying going on the earnings. A lot of good earnings around. A lot of buying. that will cease. So when we get the next leg start, I think we're probably going to be a fairly quick drop. It's just when it's going to start, and obviously at the moment we are quite sideways most of the time. So looking basically for that leg to start down on that one. So that's the DAX. The Nasdaq, very, very similar, but it's broken out of the highs quite nicely on the 72. So we are kind of going into bullish territory. I'm expecting that sort of movement at some point. So I'm expecting some weakness to start to trickle in, probably get an M pattern and then reverse from there. Assuming we are going to stay in this bear market, which there is no reason I can see why we won't. Economies are shot. People are not going to invest in stocks when their belts are being tightened, and everything is getting harder. So the stock market tends to come down in recession, and obviously we are forecast to go into recession. Britain is forecasting Q4 next 2 to 3 months we'll start to go into recession. The US is forecasting next year as well. So it's just a case of when, really. We've got 200 bounce going on at the moment as well. I don't pay much attention to the 200 from a bounce perspective, but from a directional bias perspective, obviously, when we're below the 200 moving average, we want to be looking for shorts. When we're above it, we want to be looking for longs. When we're around about there, it's either going to be a turning point or it's going to be a pullback point. So hopefully at the moment it's going to be a turning point. S&P 500, very much in the same situation. And the Dow. So all looking the same, obviously, and they all do the same stuff. But every time we poke our head above the parapet, we get shot. So looking for that next level, next leg to start. But we will see. All trends come to an end, and that's when the market structure tells us to shift. So, from here, we've been kind of long. This was your first real. We had the reverse alert down there, but your first real clue as to we were starting to go long was here. Market structure actually shifted. That third leg, third leg that breaks the high, confirms market structure shift. So that is where we had confirmation that we might want to start looking for longs. And obviously since then we've had one push up and we are sideways. So to me, the structure is definitely still bearish until we break that high. So that's what I'm looking for. Oil, as I say, with oil, we're looking basically for about the 87.30-ish level is where we've kind of got down to. Got so many lines on here. What I might do is actually just going to clear my charts. Ding. Got so many lines. You just get to a point where you've got so many support and resistance lines, and obviously from different instruments they get carried over. It just becomes a mess. So new week, clear it down. So nice looking bounce starting down here. If we look at this from a support resistance perspective, if we're going to test support, this area here is likely to be where we would look to test. We're not far away from it. It's kind of within an ADR today. But the pre-war Ukraine levels that we were trading at were 90 to 95 a barrel. And that's where we had pushed up to before the crisis. So that is why I'm looking anywhere around here. I'm thinking if we're going to bounce and we're going to start to go back up, this is where we're going to do it from. So this is kind of the situation we're in at the moment. We're down and we should be looking for bounces down here. So a good few days of up, I think, on oil is well overdue. So I should be looking to scale in and out as we go up. I'm not targeting massive moves. I think long term, over the next year, we'll be seeing, those sorts of figures, 130, 150s again, the way everything's going at the moment. But you never know. But I'll be getting out, getting in, getting out, getting in, getting out, and just basically having a long bias on oil for the foreseeable at the moment. So what happened with Bitcoin last week? Nothing. The biggest, longest flag in the world ever is what we've got on Bitcoin. Everybody's playing this channel at the moment. When that breaks, because I mean, this you've got to look at Bitcoin and all crypto being linked to indices at the moment. All the indices are up at the 200, ready to bounce the next leg down. This hasn't even got there yet. So when the indices roll over and start a next leg, assuming that they're going to, this thing's going to come down way faster. I think it's coming down to where we started. But anyway. I have a tool that will only show objects for the symbols that they were created for. Yeah, it's interesting. Not seen one of those before. Oh yeah, there are drawing tools out there that when you draw... Yeah, I know, yeah. They don't use the MT4 drawing tools though, do they? I think they use slightly different, but it doesn't bother me too much really. Right, so let's have a whiz through all the pairs and have a look at where we are. So Aussie CAD, who just mentioned that? Aussie US long opportunity if it pulls back. So Aussies at the moment are kind of neutral weak. You can see with most of them they are being beaten down a little bit or sideways. Apart from Aussie New Zealand. Aussie New Zealand is the one that I'm bullish on because when these currencies move in tandem a lot of the time. This is the low ADR pair. Aussie's economy is always bigger than New Zealand. So the New Zealand dollar got the upper hand over COVID because it got on top of COVID a bit better. But mine uses MT4 objects is something I wrote myself. All right, cool. So yeah, it's long for me, Aussie New Zealand. I was looking to buy it down here. I've been buying it quite a lot recently. I missed it last week because I just was on holiday. I wasn't paying attention to getting into new positions. But I like the Aussie New Zealand long, but all the others are being downtrodden at the moment. So I'm not sure what bias really specifically to have on the Aussie. It looks bearish, obviously, across the board. So for me at the moment, I'm just kind of going in line with what the moving averages are kind of saying, because it doesn't matter too much which direction I don't think you take the Aussie in, because I think it's the other currencies which are in control of those at the moment. So if the Canadian dollar strengthens up, Aussie CAD's going to come down. If Canadian dollar weakens, Aussie CAD's going to go up. Aussie's going to take advantage of it. So as long as you've got movement, it doesn't really matter which direction you get in. So mean reversions long or short, I think are absolutely fine to take. So it's just a case of waiting for a setup. At the moment, there's nothing really setting up on the Aussie that I'm interested in. The RSI is just not getting to those levels often at the moment. You know, we're not seeing the 80s, 85s very often. We have the odd blast where we get something moving ridiculously quick, and pretty much every single one of those you jump into it, you're going to be out of it in a week at the minute. So the mean reversions are working very well. We're just not getting very many setups because the market isn't strong at the moment. It's very, 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 very weak because it's summer trading months, and obviously we're in a new period of, oh my God, everything's going wrong. So the Aussies, I don't really have any sort of entry criteria for apart from mean reversion. So at the moment, there's nothing really that stands out on the Aussies. I would like to take this short at the moment. You know, you could have taken a short on it last week, but you're just not going to get the extensions at the minute. I'm waiting for something to get extended to have a look at it, to get in. But I want to wait for an extension. I want a big, strong move so that I know, right, these guys have got to take profit on that move. And I'm just going to take that. That's all I want. I just want to get in and out 0.5% or so. But I want to take high probability setups. And there's nothing looking amazing on this at the moment for me. So Aussie CAD, short opportunities. If you want to, take reversal alerts to the short side, M15, M5. Nice double, kind of triple top really there, which got tested again. They've just taken the highs, so all that liquidity there, nice liquidity pool sitting there, potentially being taken out. So that reversal alert could be a good one. Trade down to the lows. But yeah, I mean, these sorts of opportunities, if you like them, take them. But look at it. H1, you can see how sideways we are. We're getting these big moves, but it doesn't, like I say, it doesn't matter. Take it long if you want, take it short. Yeah, getting short there, getting short, get out. You know, getting long there, get in, get out. You know, as long as it's moving, we're fine. And range-bound trading is great for mean reversion. We're just not getting strength of movement at the moment. We're getting the odd flurry where we're getting news coming in, but even those, look, on the hourly chart, we haven't had an RSI extension on the hourly chart since 19th of July. Yeah, this is an hourly chart, so, you know, much smaller time frame, and it's just, you know, we're not getting the alerts at the moment because there's just no strength in the movement. The movement is happening because of light liquidity. We're getting the movement because of light liquidity, not because of strength. So just not amazing trading conditions at the moment. I have an entry on AU buy around the gap. Not gap, but I don't know what it's called. It's not filled. Yeah, it's a gap. On Aussie US. So yeah, Aussie. Yeah, so that one Aussie CAD. So looking at Aussie US, buy around the gap. It depends which time frame you're looking at. But yeah, I mean, this is where the gap indicator really comes into its own. When we've got weak conditions, we know the market moves to these areas because the gap indicator is showing you accumulation breakouts. That's what the gap indicator is drawing that accumulation breakout. We know that they're going to come back and retest to add to their positions on these. So you can use the gap indicator on any time frame and you'll find that it will just bounce around between them. Yeah, so we got, you know, I'd be long on it until we get up to there, and then I'd be short on it from up there. Yeah, because we're range bound. So where are they likely to be targeting? They're likely to be targeting this area, accumulation break. Yeah, so if you're long, get out up there. If you want to get into a position, get short up there. Doesn't really matter where you get in. Get in at logical areas. You want to be getting in, not in the middle. You want to be getting in when we're down at some lows or up at some highs. And you know, the gaps will help you find those areas. If you get in at this gap and they don't decide to add to their positions and push it short from there, what are they going to do? They're going to go for, the buyers are going to run for the liquidity. So you get in there, you get in at the liquidity run, and you get out on the profit take of that move. Yeah, so it's all, you know, all together, everything will give you some entries if you want them. It's just take whatever makes logical sense to you. Just either wait for it to be massively extended or wait for it to be at a point where it's likely to turn. But all of these, as I say, there's nothing really sits well with me at the moment on these. So completely sideways. Yeah, that's where you should have been buying. Aussie yen. I missed it because I was on holiday, but you know, just look for opportunities like that. But nothing at the minute on the Aussies that I can really see that I'm interested in. Aussie New Zealand I've missed, so wait for pullback, long opportunities on that one. Aussie US, I'd be looking for shorts rather than longs, and right now is actually where I'd be very interested in getting in short, somewhere up here. But that's where I'd be interested. If we get an ADR, so you know, this is again confluence, yeah. we're short bias. We just had a reversal alert to the downside. Yeah. Put in a new low. So we should be looking for that sort of movement. If we get an ADR hit to the upside with a short bias at a gap, you've got three elements of confluence. You've got an ADR hit, you've got a short bias, and you've got a retest on the reversal alert on the 4 hour. So it's confluence. Yeah. If we push up to there, they're doing a liquidity run. But if they don't, they're going to come and do a liquidity run there. So if that doesn't work for you, get in there, get out there. Doesn't matter, does it, where you get in, where you get out. As long as it keeps doing that, you can't go wrong. CAD. So CAD Swiss, hopefully that made sense. Yeah, resistance. Always take trades at logical areas. I've got a video, one of them, I don't know which one it is. But, you know, you want to be trading down here somewhere long. You want to trade short somewhere up there. Don't get into trades in the middle because you've got a 50-50 shot of it going up or down. You've got a much more high probability chance of either a liquidity run or a double top happening up here. In the middle here, I have no idea what they're going to do because they could go for that liquidity or that liquidity, couldn't they? So levels, very important. Look left, always look left. Whenever you're thinking about getting in a trade, if you get, you know, this reversal alert, look left. Why is this reversal alert there? Because we've just hit a level of support. Good, let's get in. If we don't bounce there and we come down, where are we going? Probably there or there. Let's get in again. So always look left. Make sure there's a level, a reason for price to be turning where it's turning. So yeah, CAD Swiss, a difficult one because I'm kind of, I say I haven't got a long bias on anything. I haven't got really a long bias on anything at all at the moment, but I'm a little bit more long on the CAD because of oil, and I'm a little bit long on the Swiss because of what they did with the rates and what the market's reaction was to the rates. So I'm kind of a little bit long on both of these, therefore I really don't know. But taking trades at logical areas is what I would like to do. At the moment, there is no directional bias on it. The moving averages are flat, ever so slightly down. So probably a little bit more looking for shorts than longs, but I don't really know. So I'll wait for an extension and get in on an extension. So again, nothing particularly interested on that one. CAD Yen longs, missed it. Just about to get a reversal alert potentially on this. The yen I just don't know about at the moment. All these yen pairs, this was a particularly strong push, and I think it's more, as I said earlier, weakness on the other currencies part rather than strength on the yen. It was a strong yen, which is why we got the move, but it was only that strong because of the weakness of everybody else. If it had been a normal yen push and everything else had been trading normally, we probably got a move something like that. But what we got was a big collapse. If you measure that move, 550, 530, something around about the same. So, you know, that's what we got again, and look what happened afterwards. Yeah, that's kind of what I foresee happening again. So I'd be looking for still pullback longs. So any ADR hits to the downside on anything yen based, any hourly RSI extensions to the downside, I'd be interested in longs. Any pullbacks potentially to decent levels of support and resistance, although I'd much prefer something like an ADR hit or an RSI extension on an hourly chart or something. But if you want to trade lower time frames, M15. Take M15 extensions to the downside. Yeah. So yeah, I like them. I like everything long against the yen still at the moment, because I can't see Kuroda getting themselves out of the pickle that they're in at the moment, with the economy the way that it is, and the instability that is potentially going to come from if anything happens with Taiwan. Don't forget, Taiwan is the biggest manufacturer of computer chips in the world. Around, I can't remember what the actual numbers are. It's something like something ridiculous. Like 85% of the chips that go into cars and computers come out of one factory in Taiwan. If that one factory in Taiwan gets blown up for any reason by China, which I don't foresee they would do, because that's probably what they're after, we won't have any computers for the next couple of years. Literally, we won't have any electric cars for the next couple of years. It will be disastrous. The knock-on effects to Japan, one of the biggest electronics manufacturers and distributors in the world, or the biggest, is going to be catastrophic. Do you think that's going to help the yen when suddenly they can't sell any products to the rest of the world? No. So there's a lot of fundamentals going on at the moment in the Asian area, and the fact that Kuroda has not managed to dig Japan out of its issues at all, I just can't see any reason why we shouldn't continue on the trend that we're on, with everything strengthening against the yen. So I'll be looking for long opportunities on everything yen. I don't know if you remember what I asked about the funding account, but you said the only way to pass is to scalp. Can you go into more detail, such as a strategy, risk percentage, and still trading with no stop loss? See you, Sammy. You're off. Not really. I mean, it's not necessarily scalping. You've got to use a stop loss, basically, because if you're going with a funded account, my Forex funds account that I've got, I got scalping the DAX, literally just trading the DAX. The problem with position trading is you can't control this. Yeah, yeah. Most of these funded accounts, you've got a 5% daily max loss, and you've got a 12% overall loss. You can't tell when this is going to happen. This drawdown is going to be there. If you get into something that looks absolutely amazing, it's extended 90-10 on the RSI, for example, it's hit ADR, and then it drops to ADR against you, you're going to go into drawdown on it. You can't tell when that's going to happen. So for strategies, using stops, it's just the same as everything. You want a positive risk-reward ratio, but be prepared to lose more than 50 to 60% of your trades, and make sure that you can hold on to your winners. And it's the same with scalping. Use the Price Action Toolkit. I just said lovely wicks to the upside, didn't I, on that? So if you'd have taken a short with a stop above the high there you go, there's your day done. 0.5%, take 1%, done for the day. Shut your charts. Price Action Toolkit, there's loads of videos. I traded with the Price Action Toolkit live for weeks when I built the Price Action Toolkit, just before I moved back over to futures for my scalping. But it's the same principle. Price action at support and resistance. I don't really have, use any strategy that you feel comfortable with, really, is the answer. But it's not for everybody. Getting a funded account is hard. Holding a funded account for more than a month to get paid is even harder. All these prop firms, you don't get paid your full amount until about 3 to 4 months into holding your funded account. So you haven't just got to pass the evaluation, you've then got to trade for 3 months before you get actually a full payout for most of them. That's hard. It takes a lot of discipline to do that. So you've got to have a strategy you can kind of put onto autopilot, really. You could use the EA, use the Market Reversal Alerts EA, and just use ADR. So just take ADR reversals. Where's the ADR filter? Yeah. So just use ADR and say just take entries on 150 ADR. So when you get these massive days with 150 ADRs, get in with a stop loss above the highs and a risk reward ratio of 1.5 to 1 or 2 to 1, and just let the EA trade on all ADR extensions, something like that. I don't know, the strategies, literally, I mean, you know as well as I do, I could go out right now and give you 10,000 strategies, give them to 10 people, 9 of them will work, 1 of them won't, or 1 of them will work, 9 of them won't. It's not, the strategy's got nothing to do with it. It's the money management, the risk reward, whether you can hold a trade, which ones you take because what time of day you're awake, which times you're not, the ones you like because you saw the confluence and the other person didn't. You could literally flip a coin and pass a prop firm challenge. Flip a coin now, if its heads go long, if its tails go short, put a 2 to 1 risk reward on it, you've got a very good chance of passing an evaluation. You know, I have no idea whether this is going to go up or down from here. I haven't got a clue. No one has. No one knows. Depends which bank comes in next and dumps 10,000 lots short. I haven't got a clue which one is going to do it or when they're going to do it, but someone sometime is going to. You know, there is no strategy. Price action. Yeah. You get a strong closed candle like that. It's a sign it's bearish. Yeah. Do you want to get in there? Maybe. But I would much rather get in there. Short. And then get out there. So get in up here. So wait for this to pull back into this propulsion gap from this accumulation. Yeah. When I see a bearish candle pattern, whatever it be, a strong close, a bullish engulfing, a bearish engulfing, shooting star, whatever it may be there, I'll take a short, stop above the high, get out at that low, assuming that we're going to double bottom bounce. I've no idea what we're going to do, but I'm going to assume the worst. We're going to double bottom bounce down there. Risk, reward. You can get in any way you like, you know. It doesn't matter. You have no control over it. You know, there's people out there that when they see a big long wick, if it comes back up, they sell the higher the wick, the previous wick, and they scalp that with a stop like that. That's a strategy. Probably got about a 30% strike rate, but hey, the risk reward's probably about 6 or 7 to 1 on each trade. Can you trade like that? I don't know. Every individual is different. Everyone's got different risk tolerance. Everyone's got a different strategy that they can look at and it clicks or it doesn't click. You just got to try stuff. But what I would say with a prop firm is always use a percentage risk, because the percentage target is always going to be pretty much equivalent. So if you're risking a percentage of your account on each trade, that's all you've got to concentrate on. But I've got somebody contacted me while we're on this subject. I'm just flying off on a tangent. We're up to the Swissy, who has a strategy basically where they're using ADR and they're only taking trades at ADR extremes where we have a supply or a demand level. So for example, on the 4 hour, you got supply and demand levels here. And they're the big extreme ones, yeah? So literally, it's support and resistance trading, and whatever you want to call it, supply and demand, support, resistance, it's the same stuff. Where did price turn last time? It's literally the same stuff. So somewhere up there, when they get a reverse alert, they take a short with a stop above the high. Somewhere down here, they take a reverse alert with a stop below the low. And they target a 50% retracement. So what they are assuming is we are going to revert to mean. And this is exactly what mean reversion is. Yeah. But the strike rate was, just looking for it, 61%, 61.5%. Doing that, literally doing that. They pass their evaluation doing that. So they're using the market reversal alert indicator. So they're marking out these areas, yeah, putting alerts in at these areas, and then they're dropping down and they're taking reversal alerts with a stop there, and they're holding them. So entering on that reversal alert, for example, and then closing the chart down, not looking at it. So they'll go short here, for example. On that one, they go short there. Stop there. Their target will be way, 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 way down. So this is not, obviously this is not, right, so it's up there. They would target the middle of that range. And that's their strategy. And they've got 61.5% strike rate on it. 30 odd winners, 15 odd losers out of X number of trades. And that's it. That's the strategy. Super, 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 super simple. But the key to passing a prop challenge is follow the same strategy, keep following the same strategy, and don't get involved in the trades. If it's going down, let it go down and let it hit your target. Don't take it off there, because then you're ruining your risk reward. And it's the same all the time. The thing that stops people passing evaluations is them. Pretty much every strategy you see flying around on Facebook or YouTube or whatever are all good proven strategies, and they have good proven strike rates. Problem is people can't execute them, because they'll have 3 trades that fail and then they'll scrap that strategy and go on to something else. It's the system hopping. That's what kills people. That's why prop firms are making so much money out of valuations. People cannot stop looking for the holy grail. Flip a coin, go long on heads, go short on tails, and make sure you've got a 2-to-1 risk reward ratio on those trades. An institution did it. They did an experiment with a coin and they won. Yeah, no one, I haven't got a clue whether that's going to go there or there. I haven't got a clue. No one has. But if you trade at these levels, you've got way more chance of that happening than that happening. Why? Because everybody under the sun is buying the lows and selling the highs, because that's what everyone under the sun is told to do. So there's thousands of limit orders sitting at these levels. That's why we get double bottoms. That's why we get these types of actions happening. Yeah? That's why that dropped there, and that's why that bounced there, because everybody had limit orders at those levels. Why? Because that's where it turned last time. It's really, really simple. But what happens is you'll go sideways for a day and a half, and you'll be sitting there going, I need to take a trade, I need to take a trade. And you'll go long, and that'll get stopped out, and you'll go, oh, I'll go short, and then that'll get stopped out, and you're like, oh, damn, I've just lost 1% of my account. Damn, right, okay, I'm going to double my stake now because I need to get that 1% back. If you just wait till you got up there or down there, you probably have an 80% strike rate. Well, 61.5 for that, for the person that's told me what they're doing here. They're literally just using the market reversal alerts indicator as a signal indicator at supply and demand, support and resistance, whatever you want to call it. Don't even look at trend. No idea. Don't care what the trend is. Irrelevant. They're mean reversion trading. Trading bounces. And this is why I say all the time in my video, well, my videos, don't take trades in the middle of a range. Take trades at the extremes, logical areas. Where's the market heading for? The market heads for areas where there are inefficiencies in the market due to propulsion moves, and it aims for levels that have been supply and demand or support and resistance in the past, to see if everybody that was selling there has given up selling and we can get a breakout to a new price level. That's the way the market works. At the end of the day, the human beings are driving this, and the human beings are all doing the same stuff. The institutions are human beings. The scalping algorithms are working at such a tiny level, they have no impact whatsoever on direction. Fundamentals and human beings drive the market, and you just jump on board with the sheep. Or do the opposite to what most of the sheep are doing if you're following the retail crowd. I just hate using stop loss now, and it's hard to trade with it nowadays. Yeah, exactly. I mean, this is the problem. This is why everybody goes and finds the Holy Grail, because they use a stop loss. When you realise that the market just is a buying, profit taking, buying, profit taking, buy and profit taking, buying, profit taking, buying, profit taking machine, you just need to know when the likelihood of the profit taking is going to happen. Forget everything else. There's no, that's it. Yeah. Everybody that's sold here has to get out of their positions by buying. That's why market structure exists. Sellers exiting, sellers exiting, sellers hitting more buyers, buyers exiting, buyers exiting. Market structure, market cycles are literally buyers and sellers entering positions and taking profit on positions. After a certain period of time, they will have taken so much profit that there won't be any more people interested in selling it, because this price is not deemed as a good level to be selling, and then the buyers will take over, and the cycle continues. So it makes logical sense, doesn't it, to buy at those levels or sell at those levels, because that's what happened in the past. It's just what, and this is to say, I'm not interested. All these Aussies we just looked at, I'm not interested in these Aussies, because there's just nothing there. There's no levels that are of any interest to me. Right now, where we are in the Aussie Swiss, it's not of any interest whatsoever. That's interesting, that's interesting, that's just not interesting. Hopefully that helped, probably not. But that's, if you want a strategy, that's it. And use a wider stop than everybody else as well is a really good tip. If you're going to use a stop, everybody stops in the same spot. Yeah, you look at the futures market, it's one tick above. Yeah, look at ADR, half an ADR. If you put your stop half an ADR, just over half an ADR above where you think it's going to get to, if they're going to run liquidity, yeah, they're going to do it by a little bit more than just that. Yeah. Yeah, they're going to run liquidity. It's always going to be a little bit more. So make sure you're not a little bit more. Make sure you're a comfortable amount beyond with your stops. Tight stops. Everyone's up for tight stops. Why? Because if you get a tight stop, you get it's much easier to get a good risk reward with a tight stop. If you have a loose stop, it's a lot easier to get a 1-to-1 with a 50, 60, 70, 80, 90% strike rate than it is to get a very tight stop and a high risk reward. You're going to get something like a 20, 30% strike rate. Bigger the stop, the more higher your strike rate will be, because you're going to get stopped out less, and therefore you're going to win more trades, but you will get a lower risk reward. It's a balancing act, and this is the eternal problem everybody has had as a trader since everybody started retail trading, was risk reward. There is no answer to risk reward, and this is why I get out with what the market gives me. Yeah, when I have some profit, I take it. I've no idea how far it's going to go. I have no idea when it's going to turn. What I'm interested in is putting profit in here from here. So when it's not in profit, nothing I can do about it. When it gets into profit, I put it in the bank. I've no idea how far it's going to go, when it's going to turn or anything. No, nobody does. Just make sure you're getting in logical areas. There you go. That's my prop firm. That's how to pass a prop challenge. As far as I'm concerned. Flip a coin. But flip a coin, well, don't flip a coin, that's a silly thing to say. Logical areas. Down here, it's kept turning here. Turned again. Yeah. Kept turning up here. Yeah, don't get in here at all. No reason. Getting up here or getting down there. And give yourself a nice wide stop. Stops up there, stops down there. You've got all this to play in then. And just be patient. So CAD yen looking for longs. Going back to these again. Swiss yen just hit ADR high on the hourly. RSI high on the hourly. So I'm in this. I'm just going to trail this actually behind this candle now. So 340. So this is my final position on the Swiss yen. Still liking it long, but obviously we're getting very extended. Now we got extended. We got an accumulation push out of the RSI extension. So at some point I'm expecting this to come down. Highly likely that accumulation breakout is the target. So ADR today, if we get up to there, I'll be out. In fact, I'm going to set a TP there. Middle of that, propulsion gap. So that'll be me out the Swiss yen. And then pullbacks, longs. So wait for it to get probably into this accumulation here. And try and take another position long out of that. If it breaks down into there, then maybe take one out of that. But that's not a proper propulsion gap, this one here. Yeah. Because there was no accumulation before it. This was a V-shaped recovery, which is not a propulsion gap. So ought to really code an indicator that takes those out of the equation, but it's very hard to code accumulation. You've got to have lots of settings on it. So euros. So euros are all shorts. Looking for short opportunities. So I'm looking for ADR extensions to the upside to take shorts from. I'm looking for RSI extensions to the upside to take shorts from on the hourly or the 4 hourly. Again, look, we're just not quite getting there. We had one there, nice short, but that's it. Yeah, going back to 27th of July, you know, a few weeks here. Just not getting the alerts at the moment because the market is just like this. So if you can get up to these highs, yes, interested in shorts, but right now that's stuck bang in the middle of nowhere, not interested in no man's land. Same with this one, looking for shorts on the Euro CAD, expecting the CAD to strengthen up. We've got a nice little market structure on this one. Expecting it to continue, make new lows, but you know, we've got the double bottom there, and since we've got that double bottom, we've gone nowhere. Yeah, we're just stuck sideways, but I'd be much more interested in shorts than longs. Again, all of this bias at the moment is going to change depending on what they do with interest rates. At the moment, the whole world, for some reason, seems to have stuck into this. We're going to put our interest rates up by 1/4 to 0.75%. No one's getting on top of anything. And this is why when we're getting these nice big increases in interest rates, the market isn't paying any attention. Yeah, normally you would expect that. What we're getting is that, because they're like, well, what's that going to do? What's 1/4% going to do? What's 0.5% going to do? Inflation is rising at a rate that we haven't seen for 40 odd years, and you're putting it up by 0.5%. Really? It's not happening. It's not working. Cost of living is going through the roof at the moment. Someone's going to have to step up, like the Swiss franc did. Yeah. Swissy stepped up and went, actually, what we're going to do. Let's try and find a better Swissy. Swissy stepped up and said, surprise, 0.75%. Market went, whoa. Swissy's getting on top of it, because they forecasted to do nothing, and they went, no, actually, this is really bad. We need to go up 0.75%, not nothing. And the market was, yes, thank you very much. Therefore, Swissy, I want to be long Swiss franc. Obviously, Aussie Swiss would be short in this case. So with all these euros, they're not putting up the rates enough. They haven't put their rates up for such a long time, and they are just creeping them up at a rate which is having no impact whatsoever on the economy. So euro continuing short until somebody comes out and actually Lagarde says, right, okay, 1%. Then I think the market might sit up and go, right, they're doing something about this. Until then, business as usual. Shorting everything. So again, looking for areas, Euro Swiss, prime example, M15. Yeah. Short opportunity was there on Friday at that high. There's a prime example if you want a setup. Is that the high? Yeah. So take a reversal alert, when you're up at these highs, stop above there, target in the middle. Yeah, didn't get there. So let's say, for example, this one had failed and stopped you out, and you got another reverse alert there. You take that one short, stop above the high. Yeah, if that one works, it's going to pay for that easy. If that one didn't work and it pushed up again, and you got another reverse alert, take that one short. And then you've got an even bigger reward for your tiny little risk, haven't you? Yes, you've had 2 failed trades, but if you've got a 2-to-1, 3-to-1 risk reward, you only need to win 3 out of 10 trades, and you're absolutely laughing. So take 3 stabs at it, maybe. There you go. There's a rule for a strategy. I'm going to get in when we get within half an ADR of a high. Yeah, I'm going to have 3 cracks at it. If I can't get in with those 3 cracks and get out, I'll move on. Strategy. There you go. Just came up with one. Try it. Back test it. See what happens. As long as you've got a positive risk reward in it, you'll be fine. So yeah, we've got obviously a very obvious level of support and resistance here, which we are up around. So if we got a push up today above this level, I'd be interested in shorting there. We've got a lot of accumulation to get through at the 24. 24.72 bounces. Yeah, you want to be super patient. Getting short there. Stop above the 72. Play the long game. Don't know. All sorts of strategies you can do. Kind of make it up. It's got a positive risk reward. It's got a chance of working. So yeah, all these euros I'm looking for short opportunities on. At the moment, there's nothing that's really standing out particularly at the moment to me. Euro pound is very flat at the minute. It's kind of gone short, which I'm surprised about, because I thought the pound would actually weaken a little bit more than it did, but the euro's weakened even more. So not quite sure on the euro pound really what I would be interested in doing. I think I'm still interested in shorts, but it's a very short pair against a very short pair. We got an RSI extension to the upside last week, but I'm not really sure. There's a lovely accumulation drop on this, actually on M5. So yeah, I mean, that was the trade on Friday when they took out the liquidity at the highs there. You're still in it with the drop down to there. So you could take a short break. See, look, I mean, just as an example, if you've got a target of a propulsion gap, like that, stick an order there. So I'll do it now. 30. It's going to be a bit high. You see what I mean? But it doesn't... Strategy to me is just a reason to get in and out of a trade. Yeah, risk reward on this trade is 47 to 40 odd. So it's roughly 1-to-1. But I see this as a 50-50 shot, which is why I've got 1-to-1 risk reward on it. If I want to be a little bit more risk rewardy, let's go above these highs. Yeah, we've tapped into them 3 times and bounced. Why wouldn't we tap into them again and bounce? So I'm going to get in on a break of these lows. Assume that we're going to do the propulsion gap fill, and I'll have my stop there. There's my risk reward. Positive, that's a 1.5 to 1. 27, 42, roughly. There's a trade. Just coming up with strategies. Doesn't matter, does it, what your strategy is? This is a breakout strategy. So I'm looking for a breakout to a target. The reason for this trade is this. That's the reason for the trade. That's my target. Where my stop goes is dependent on where we've been recently. So you can either go there or you can go there. Yeah. Pretty strong level, that, isn't it? You could probably hit the sell button right now with a stop above there if you wanted to, and just trade it down to these lows. There's a positive risk reward. Yeah, if you go short right now with a 5 pip stop, you got a 12 pip target. That will play out in the next 15 minutes. I don't know, I'm just making it up. Anyway, shorts is what I'm interested in. Which EMA do I use? JJ. So this is the 24 and 72 on the daily. So these are what I call the institutional movement averages. These are covered in the Boocamp. So this is the 24 monthly, and this is the 72 quarterly. So the monthly and the quarterly reporting moving averages. And on the 4 hour, you see the same thing, just these are the dailies on the 4 hour. So the daily 24 on the 4 hour is the 144 rather. The daily 72 is the 432, or roughly. It's there or thereabouts. Again, it's not an exact science. It's somewhere around here is where I'm looking for a reaction. Nothing's to the pip. It's just somewhere around that level. Right, so euro pound, yeah, liking shorts. Euro yen, I can't really like longs on it at the moment. I'm not quite sure what to do on this, therefore I'm not in it. So we got this level up the top which held. We put in a new low, we've put in a lower high, we've put in a lower low, we're putting in a lower high. I'm going to assume market structure is going to hold on this. We are up at a point now where potentially we should be looking to start a short position on it. Except you're trading a very, very, very weak currency that's been weak for 6 years against a currency which is massively weak at the moment. I don't really have a bias at all in either direction on it. So again, in theory, if market structure keeps going as it is, you could get in short here. If for any reason it continues to push up, you're going to scale in and get out on the drop. It's either going to work or it's not going to work, in which case then obviously you're going to take a position short on it. But I'd like to be short on this probably, but it's not extended. Again, I want to get extended. Yeah, I want to be having a nice proper extension that I can trade out of. At the moment, it's not extended enough. I want an ADR hit to the upside on anything euro. Euro New Zealand is stuck at these highs. Very nice resistance built up there. So again, short right now. There you go. There's a trade for you. Euro New Zealand short right now. M15. Got that high there. You got that high there. Yeah. Hit the short button right now. Stop somewhere up there. Target. Positive risk reward. That's what you need to be looking for on your prop firm evaluations. Yeah, this is why you need to go through and analyze your charts every day. Look for opportunities. You know, say, right, okay, if we get up to there today, I'm going to sell it. Put a sell limit up there. Yeah, with a stop. Like that. Look at the risk reward on that. 13 pips, 196. I don't know what that is. It's 10 to 1, isn't it? Plus 15 to 1, something like that. Yeah, good trade. They won't work out that often. You might get 20% of those, 30% of those work, but with a 20 to 1 risk reward, who cares? Just got to be disciplined with it. But yeah, there's a very high probability if it gets back up into there, it's going to reject again. They could well come up and take out yesterday's high liquidity and then go, right, well, let's take out the liquidity there and the liquidity there. Once they've done that, could collapse I don't know what it's going to do, but you know, equally you could do the same trade by setting a sell stop under there. Yeah, you're going to have a much lower risk reward on this one. Probably go above those highs there. Yeah, one of those is probably going to work, isn't it? It's either going to, we've either found the high and it's reacted and now we're going to head down to the lows, or we haven't quite taken that liquidity yet. We're going to come up and take that liquidity and then we're going to drop. Or if you want to be Mr. Patient, wait for a push above those highs, take the next reversal alert short, risk reward, there. Yeah, that's what the reversal alert indicator's for. It's to tell you when the structure is broken. Yeah, you're going to get a later entry always with this indicator. You're never going to get the best entry with a reversal alert indicator, but you're going to get an entry that is confirmed. So you got more chance of it playing out because we have confirmed actually, yes, we have rejected that area, rather than trying to catch the shooting rocket or catch the falling knife. There you go, a couple of trade entries. See, I could take these all day long, but I don't trade with a stop. Yeah, I'm not, this isn't me, is it? You know. So yeah, Euro New Zealand is sideways. Yes, short. It's probably a good short opportunity there. It's actually not a bad trade, actually, to be honest. It's just a shame that we had this push and accumulation, because the reversal alert's going to come in late. But there's your entry for me on that reversal alert. And it's probably a 2 to 3 day hold to get down to the lows. M5, you've had your reversal alert already. But Euro New Zealand, like it as a short. Euro US dollar accumulating. I like this short, but it's just, you know, there's no entry there at the minute. I could start to build a short position on it at the moment. I've got no euro on at the minute. Got no exposure on the euro at all. But that's because it's not going anywhere. So I don't really want to. I've got double exposure already on the US dollar long. So if I take this as a short, I'm triple exposing myself on the US dollar, which I can't do. So it's not for me. But again, nice entry short here. You know, worst case scenario, if you hit the sell button right now, you've got 100 pips. You've got one ADR move to the upside. We keep trying to break these lows. You know, since we pushed up into here, you know, this level, we keep trying to break this level, and we fail. We've had one go at it. Price discovery got rejected. Since then, we've been in an area of balance. Price discovery rejected, balance. The next breakout of this balance is likely going to be the move. I don't know which it's going to be. We've got no news catalysts this week, really, that are going to tell us either, have we? There's no news on the euro. We've got a bit of US dollar news coming out. But yeah, shorts on the euro US dollar. Pound odd, short. So with the Australian dollar and the New Zealand dollar, they've done better out of COVID. They will do better out of conflict because they are big mineral producers. So I'm kind of slightly neutrally long on the Australasian pairs, more neutral than long, but I am definitely bearish pound. So I would definitely be looking for short opportunities on this. There was your short opportunity up there on that pound odd. So any kind of pullbacks, so say we just retested the 4-hour reversal alert. So actually this candle, this is the candle, you're going to get the arrow above that candle there right now. This is the retest of the 4-hour reversal alert happening right now. So yeah, short opportunities I like on this one. So again, any ADR hits to the upside, any hourly extensions on the RSI, like that M pattern reversal there, and retest. Anything like that, interested in shorts, pound odd. Pound CAD, interested in shorts as well. Again, nice push up into resistance there. and coming down. So Canadian dollar strong on oil, pound weak on everything. So we're looking for shorts. So any ADR hits to the upside, any RSI extensions to the upside on the 4 hour or the hourly, be looking for short opportunities. Pound Swiss, same thing, except this is stuck. So Swiss franc, obviously, with the rate announcement, we got the big strong push off the rates to these lows. This is where we found balance. This area here, let's draw it on properly with lines. So this area here, really, oops, where we pushed down initially. We pushed, held support, broke that support, used it as resistance, got into an accumulation, broke that, came back up, used that as a resistance, and since then we haven't gone anywhere. So 24 and the 72 are holding this down at the moment, but these are the two key areas, or this area here as a whole is the key area. So any pushes up into there, ADR extensions to the upside, we're looking for shorts. I don't necessarily think you're going to get them. But I mean, you look at where we've been, and this is the problem I've got with a lot of these trades that I'm in at the moment. And I've been in them, you've seen me, I've been milking and milking and milking profit out of these. We're not going anywhere. I'm just sitting in drawdown because we are literally not going anywhere. So I'm constantly milking every short push, not quite getting down to some of the positions which are going back into drawdown. Yeah, and just waiting for that next leg to start, but we're just accumulating. So again, sell the highs whenever you get them. So any pushes on ADR, any pushes on RSI, etc., etc., just sell it. Pound yen, no idea. Mess. It's like the euro yen. It's a really weak currency against a really weak currency. Therefore, we get accumulation. Sell the highs, buy the lows at the moment. But at the moment, I would be interested really only in selling the highs. So where we are at the moment isn't actually a bad spot where we've touched on this morning. So we've pushed up into a double top. We didn't actually take it out. So there'll be enticing shorts in here. Liquidity is going to be sitting there. Liquidity, that's news. So this is a news event. Unlikely there's liquidity there because this is too fast, this price action. Actually, there probably will be because people will have entered short on a break of that low. They would have probably had their stop. That's a big old stop. Think about how everyone else would be trading this, yeah, as a risk-reward basis. Is there enough risk-reward there for someone to trade it? Yeah. 1.5 risk-reward. If they got in on the break there, put their liquidity up at the high, their stop at the high, and their target down there. They're in this trade still because what we did the following day was push them up into drawdown. We pushed them up. We nearly took out their stops, but we haven't. So there's liquidity sitting here on everyone that's playing this double top, and there's liquidity sitting there. Likelihood is they're going to take that liquidity before they run to the lows. Yeah. So reversal alert we've just had here will probably get invalidated as they come and try and take out these highs. But that is a triple top as well, which is held. So we could well just trade back down to these lows. Don't know what we're going to do. If you want to use a stop, get in now there with a stop there and your target there. Massive risk reward, 3-1. If you want to use a stop. If you don't want to use a stop, I don't know what to do with this, which is why I'm not in it. It's just a mess. I kind of like it, excuse me, more short than long. But I like things long against the yen at the moment. So I'm conflicted on this, so I can't really trade it. So I'm not. But I kind of like where we're turning now. So I think this is probably a good opportunity for a short. If that was up there, I would be in it. But I'm not. It's not up there. Hourly, not up there. If the hourly had got up here, I'd be interested. But I'm not. So don't know on that one. Not much help this morning, am I? Pound New Zealand, yeah. Flip a coin. Not a clue. Oil's pushing down, is it? Yeah. Yeah, I think I might start taking profit on the oil a bit faster. I've had 3 opportunities to take profit on that. Where am I? Pound New Zealand. This one here last week. This position. I had an opportunity to take a profit on Friday. I didn't. Really close to my TP. And it pushed down. And it pushed up again. I had $150 odd profit on it this morning. It's only about 0.3% or something, so I didn't take it. Now it's pushing down again. We seem to be getting into a bit of a sideways accumulation at the minute. So yeah, probably come down and retest these lows today. And then hopefully push from there. But again, no news, catalysts. Oil on Wednesday. So oil is always on a Wednesday, 3:30. I've got the crude oil, crude oil inventories. So we might have to wait for crude. We'll see. So yeah, pound New Zealand is a mess, sideways mess. It's a horrible pair to trade because it's really hard to pick a low on this. Yeah, it's just somewhere around here you want to be interested in buying it. If you get, I mean, you can, almost every time you get very close to it, it bounces back off. Somewhere up around here you want to be looking to short it. But it's all very, very woolly. So where we are right now, not interested at all. Yes. No idea when we're going to get there, but when we get somewhere up around these highs and lows, that's where I'll be interested in pound New Zealand. But at the minute, it's just stuck in a mess. You can take a short now, but if you take a short now and it goes long, you're going to have to scale in there and possibly up here somewhere. If you go long now, you're going to have to scale in somewhere down there a couple of times. So whatever you do now, you've got a 50-50 shot of it going your way and making a profit, or you're going to have to scale into 3 positions minimum. It's just not attractive at all. Pound US, I'm short. I've taken loads of profit off of this. I like it short still. I took the bounce off the 24 as an initial entry, and I've just been scaling in and taking profit off of it ever since, just waiting for it to push back down. We've held the 24.72 zone nicely out of this area of balance. So yeah, short. Already short. You can get in short anytime really on this one. We've got the 4-hour reversal alert, hourly. Had the reversal alert, we've made a new low out of that double bottom, which is nice. So could well push up into here again and then back down. As I say, nothing's got any massive movement or strength at the moment. Hopefully the US dollar will give us some positive catalysts to drive this one down this week. But I'm within an ADR on it. I'm not uncomfortable in anything I'm in at the minute. I'm just waiting, as usual, for the market. So New Zealand dollar CAD shorts, but it's a really low ADR, this one. There's better CAD pairs out there, I think, to trade. Morning, Franco. Yes, vacation was fun. I only went to Centre Parks. Nothing extraordinary. Well, I still spent 700 quid somehow in Centre Parks. Amazing. But yeah, it was good. Kind of want to come back and have a holiday after you've been to Centre Parks for a holiday because you're constantly doing stuff. But yeah, so shorts. I had an Australian friend over at the weekend, and I said to her, we'd just been to Centre Parks. She looked at me completely blankly because they don't have Centre Parks. It's a UK thing. So if you don't know what Centre Parks is, envisage 300 log cabins in a forest with loads of activities like cycling, zip wiring, a big subtropical swimming paradise swimming pool type thing with slides and all that sort of stuff. It's one of them for the kids. New Zealand dollar CAD short. Like it short. I've got no New Zealand on at the minute. But again, we're kind of, if you look at it on a lower time frame, where we are right now is not great. So I like it short based on trend, obviously, short. from a levels perspective, we are pushing ever so slightly on the hourly. And then from an M15 perspective, you kind of want to be looking for your longs and shorts at sort of recent highs and lows. So where we are now, I'm not really interested. If we get an ADR push to the upside on this, I would probably be interested in shorts. Or again, RSI extensions to the upside. So that would have been your entry up there. So that's kind of what I'm looking for on New Zealand dollar CAD. I'm looking to short it based on the trend. But at the moment, it's not really in the right spot. So you could look at this as again, we've got lots of these going on, really long flags that we're waiting to break. So yeah, shorts on New Zealand dollar CAD, but not right now. New Zealand dollar Swiss, same as the pound New Zealand, just a mess. Got these highs here that are holding. You know, there's lows everywhere. Take your pick. Where do you get in long? So I mean, I'm short bias on it because obviously we're in a downtrend. Swiss franc is definitely bullish. Right now though, I want to be shorting up here somewhere. So ADR hits to the upside, RSI hits to the upside, any kind of hit to the upside, take reversal alert short. New Zealand yen, again, I don't trust the yen at the minute. I just don't know which way it's going to go. I'm bullish on some pairs and I'm bearish on others. It's just really difficult to trade the yen. So I would be interested in RSI extensions. Short and RSI extensions also long. I'm a little bit more long than short on it, but again, I'm really undecided, so I'm not in it. I don't know what to do with that one. New Zealand US, looking for short opportunities on US dollar strength. We haven't had that US dollar strength, as you can see. So I'm still looking for short opportunities. We've tried really hard to get this reversal alert to the short side. We can't get it. So you've got a little head and shoulders pattern here, again, which has failed. So we are just range bound. I'd be interested in shorting it. I can't take any of this at the moment because I'm double exposed long on the US dollar already. But I would be interested in shorting it if I wasn't. So looking for, again, RSI and ADR extensions to the upside, getting into short opportunities as they come and take out liquidity and then drop. But again, nothing really I can get into there. US dollar CAD, I'm in long. Like it based on US dollar strength. This is a long against a long. To be honest with this one now, I'm less excited about it than I was previously, because the US dollar, I was expecting a much bigger market reaction to their rate increase than they got. The Fed came out and really stomped on the bullishness in the market. They really painted actually, yeah, we're not going to land quite as softly as we thought we were going to land. COVID, we haven't quite recovered as well as we thought we were going to recover. Recession's going to come a little bit quicker than we thought, although we said we weren't going to have one, now we might do. And it all got very bearish. So for the US dollar, where I was expecting US dollar strength, I'm kind of now a little bit, if you think about, I'm in a slight up channel on the US dollar from a market sentiment perspective. Which gives me a problem because I am bullish CAD based on oil. So I'm kind of now like that. I'm long on something, whereas maybe I shouldn't be. So I'm thinking I want to kind of get out of this one. Again, I'm within an ADR. I literally need a bit of strength. Probably not going to get it to Wednesday, Thursday on the US dollar, or some weakness on the CAD just to get me over the line on this. And I'll probably take it off. I've made quite a lot of profit out of this US dollar CAD. You know, I've made enough out of it to say, right, I can walk away and be done with you. But we'll see. After last week's news, bombardment, horror, I'm hoping this week is less erratic. Yeah. I really thought World War III was going to kick off this weekend after the China encircled Taiwan with jets and boats. It was like, that's a proper sign of strength, isn't it? 60, 70 jets flying around your island and a load of warships. It's like, yeah, okay. But yeah, that didn't seem to escalate at all. It de-escalated very fast, and it's not even hit the news since. So, but it's just the world just feels like it's treading on eggshells everywhere at the moment. We've got these big superpowers all sitting there, flexing a lot, and you know, it comes down to economies and whether or not they've got the money to wage war, and I don't think anybody's got the money to wage war at the moment. That's the problem, apart from Russia, who will finally run out of money at some point. But so yeah, US dollar CAD I like long, less so now than I did. So I'm just waiting really to get back to break even on this, and see. The thing that it has got going for it is we did make a new high. We managed to break out of this level here, which we dipped our toes down below at the moment, which is unsurprising because we've got a big propulsion gap that got put in on non-farm payroll. So yeah, I like that movement, and it's exactly what's playing out. So that's what I like. Yeah, propulsion gap is done. So I like it to the upside still, but less than I did because I don't think we're going to get that US dollar strength necessarily that I'm expecting. So it's going to be a week long push, and this is the problem we have with everything at the moment is the strength of movement that we're seeing off of news events is way weaker than we're used to. So rather than getting into a position as you know and being in and out of it in a few days, a week, you will get yourself into positions and you will be in them for weeks. You'll be milking them, you'll be making money out of them, but you'll be in them for weeks because instead of getting that, we're getting that. Yeah, so you're making more money in the movements that happen and go your way because you're getting in and out and in and out and in and out and in and out. It's just where you were planning to get from A to B. Instead of going from A to B, you're going from A to B to C, and it's just taking a long time because nothing's got the strength to get there. So just got to be patient, which is a problem because when you tie yourself up in exposure and you see beautiful entries, you can't take them. But so US dollar CAD still like long. US dollar Swiss, I don't know on this now. I'm bearish on this based on the Swiss franc. Oh, here comes our adult site again. Welcome back, Mr. Adult Site. Keith's coming back. Bless him. US dollar Swiss like long. That's the best adult dating site apparently. Do you know, I was watching somebody else's stream the other day, and that exact same bot came up. They seem to be targeting trading streams because obviously, I guess the majority of our watch is adult. It's adult. Well, obviously it's adult, but it's male. So I guess they think, traders, they're all men, which isn't true. But anyway, US dollar Swiss. I'm. If you look at this, what's happened to this since the Swiss franc rate announcement, which is there, we put in a new low, and we put in a lovely 61.8 retracement move, and then we've made a new low again. I'm very slightly bearish on this now because the US dollar's weakness and the Swiss franc rate announcement obviously gave the market a big push on the Swiss franc. This is one I think I'm kind of bearish on. So I missed the opportunity last week to get into this because I was on holiday. But I like this short rather, from kind of anywhere up here. Friday was the entry. Actually, this morning was kind of the entry. It's already gone down a little bit. But I like this for building a short position based on Swiss franc strength, because I think when the Swissy powers up, it's going to have days where it's just going to slam the US dollar like it has. Yeah, so you get going nowhere, Swiss franc strength, going nowhere, Swiss franc strength, that sort of movement. But again, it's going to take weeks. You might be in it and you'll be in it for a week or so. Ladder, no, they're on all live streams. YouTube, not getting ahead of them. Yeah, it's just they make new bots. They make a bot gets banned. They make another bot gets banned. You can't keep on top of the bots, basically. So yeah, I kind of like it short, but it's just not. You know, the trouble with the Swiss franc is the euro is going to drag it down, and the euro is very weak. So it's very hard for the Swissy to get any momentum. You got the momentum off of the news, but you know we don't get Swiss franc news that often, especially not unexpected rate announcements. That's the first one we've had in a decade. You know, they don't come along often, so I don't really know what I want to do with this. Therefore, I'm not in it. US dollar yen again. I like it long. I'd like it from down here somewhere. So I'm not interested in it where it is. I might be interested in a propulsion gap long, possibly. But again, this is potentially, as I said, the yen. This is why I don't trust the yen. From a market structure perspective, all the yen pairs are making bearish market structure. So, but again, like I said, I don't think that's because the yen is strong. I think that's because everything else is much weaker than we were expecting it to be. Therefore, every little yen push drives the market down. Don't forget, the Japanese economy is big. Little island, make a lot of stuff. So I think we need to give it a little bit of respect that, you know, the yen, when it powers up. And when you've got some currency that is just sitting there with no strength whatsoever, it's just going to get battered every time the yen strengthens up. So I kind of like it long, but I'd like to take it long down here in case we get that sort of movement so I can scale in and get out exactly the same as I did with the Swiss yen. Yeah. So, you know, I got in somewhere, and that might have actually been my first entry, I don't know. But I got in somewhere around there expecting the bounce off the 24, scaled in, out. So I want to be getting in when we're extended, so that I know if we do go super extended, we're going to get out very easily. So, but yeah. So that's all the pairs. That's everything covered. Still very, very difficult to find opportunities out there at the moment. So I'm in what I'm in, and I'm just managing these at the moment. And you'll find this a lot with position trading. You will get in to something, and if it doesn't go your way for a week or so, you will just be sitting here managing and milking this. Yeah, so constantly milking all of this profit for the last month and a half has all come out of very few pairs. Yeah, it's all been coming out of very, very similar, you know, Aussie dollar CAD. Took all of that out, the Aussie dollar CAD, pound US dollar in there again, Swiss yen in there again, Aussie CAD, pound US dollar, Yeah, so it's all coming out of very similar pairs all the time because we're just doing that. And if we are long something and it's channeling down, we're just making money like that, constantly getting in and out. But what will happen is you'll build up a number of positions where you'll just get to a point where you've got 4 or 5 or 6 on, but they won't be in massive drawdown. They'll just be in a bit of drawdown. So just the way it is at the minute, unfortunately. Franco, like your stream, we don't have to deal with you smoking dope and talking trash behind gang fight music. I could do an Elon Musk. Who does that then? Smoking dope. That's why I don't put my face on stream. It's not about me, it's about the charts. I could be a small troll, for all you know. Broadcasting from another planet. Like that panda guy. Have you seen that guy that doesn't show his face, but he's got one of those facial recognition plugins where he appears as a panda and trades futures? Very bizarre. He gets a lot of views though. Give him that. But he trades Apex. Can't remember what his name is. But yeah, he trades an Apex funded account, which he's blown a few times, as everybody does. That's what you do. You get them, you milk them, you blow them, you get them, you milk them, you blow them. Just life. So that's all I've got for you today. I've got these positions to manage. There's a few opportunities I've been through there to get in on a few things, but they're on stuff that I'm exposed on already. New Zealand dollar is kind of Aussie and New Zealand. I've got no exposure at all on the Aussie New Zealand at the minute. So those are ones which I may well look at. Its trouble is I don't know what quite to cross them with at the minute. So it's difficult to get into them, but I will be keeping an eye on those, and obviously I'll post in the Telegram group anything that I'm getting into. I'll post in the Telegram group anything I get out of as well. So keep an eye on the Telegram channel if you're in trades similar to me. So Swiss yen I will be exiting completely today, one way or the other. It's either going to come up, do an ADR hit and get me out at TP, and then I'm flat on this, or it's going to come back down and I'm going to stop out on it. So I'm done with the Swiss yen for the minute, basically because obviously we're getting tired and extended, and we are at extremes on the fib. If you want to take that as your move, you've got a little bit more room, but this propulsion gap here is where I'm expecting some selling to start, so I'm not going to hold it any longer than that. And then I'll decide as we go on, you know, what happens with the yen, whether I want to get long or short. I don't know at the moment. If in doubt, stay out. There's plenty of other things to trade. What's the indices up to? Not a lot. Bit of a drop. We're an hour and a half in. Opening range high 2 is in. So that could either be, that could be the low of the day. If not, that will be the high of the day, with 75% probability. Good breakdown tonight, thank you. No problem, Franco. Not very helpful, to be honest. We're in a bit of a... It's just a weird market at the moment. Pound New Zealand kind of sums the market up for me at the minute. That's how I feel. 1 minute I'm looking at it and I'm long, the next minute I'm looking at it and I'm short, and it's just really hard at the moment. I'm finding it very difficult to take longs. Every trade entry that I'm taking at the moment is based on being short a currency. So I would take a short based on pound being weak. I wouldn't be taking, you know, because then I'm automatically long New Zealand if I short the pound New Zealand, but I'm not trading to be long on the New Zealand, I'm trading to be short on the pound. So my focus on everything is bearish. Obviously when you get into a currency pair, you've got to be long on something, because otherwise you're not, you know, every time you're shorting the pound New Zealand, you are going short on the pound and long on the New Zealand. So you've got to be long on something, haven't you? Which is why I had that CAD double exposure on. I think you can trade anything in any direction at the minute. I really do. But I'd have always try and have a bias with the moving averages at the minute. You know, everything, you know, is trending. Everything's trending in varying degrees, but you know, you can see on the daily charts and the 4-hour charts, you know, it's very obvious at the moment what direction stuff's going in. And you've got much more chance of a trend continuing than you have of a trend reversing. And this is why everybody fails with most strategies, because they're trying to pick the high and the low. You've got 80% chance of a trend continuation and 20% chance of a reversal. So, you know, just assume until you're proven wrong that you're going to continue on your current direction. Yeah, think of it like a train. Yeah. Can't turn around unless it gets to a station, gets on a turnstile, it goes back the other way. So assume that train is going to carry on until it proves otherwise. Right, so that's all I've got for you today. I'll be back tomorrow morning 7:50 at the same time. As I say, news-wise today, there's nothing coming up at all. Tomorrow we've got no news to worry about in the morning either, and Wednesday afternoon before the market opens, we've got before New York opens, we've got CPIs. So there's nothing to worry about on news. There's nothing particularly coming out here. South Korea, price stabilization, blah blah blah. Yeah, just nothing of any interest at the minute. So keep your eyes on this. This is going to be more of a catalyst at the moment than anything else. So if you go on Financial Juice, the unexpected news events are probably more likely to help us than anything else. So apart from that, load of rubbish. I'm not going to trade futures today at all. The futures channel, since I set it up, I kind of set it up week before I went on holiday, which was a silly thing to do because people are leaving that channel because nothing's happening in it because I haven't been here. You can't trade futures obviously from holiday because you're scalping. But I will try and do some more stuff on futures. I need to get back into that really, but I'm not going to today, and I've got lots of stuff planned that I want to do this week and next week because it's school holidays, so I want to go off and do other things. So I'm making decent money out of the Forex at the moment, so I don't need to make too much money out of the futures. So and I don't want to over trade the futures because it's the easiest way to blow the accounts. So but I will put some future stuff in, and I kind of want to do some videos on strategy and record some sessions so that I can just put those up for people to watch, basically what I'm looking for and what I'm looking at, and just kind of break it down. But like I said, with futures, it's kind of it's one of those things where you kind of have to find your own way. It's very difficult to follow what somebody else does. So, but anyway, I will put some more stuff in the futures channel when I've got something to actually show. Right, so anything else anybody needs, come in the Forex channel, in the Telegram channel. I'll be back tomorrow morning, 7:50. We'll go through everything again and see where we are, because we've got no news. It might be a short one tomorrow, unless we get any extensions to look at. I don't think there's going to be a massive amount of opportunity. Aussie yen doesn't look bad. Aussie New Zealand I want longs. Swiss yen I'm getting out of. So, you know, it's just nothing there, is there? Horrible at the minute. So hopefully you have a good day. Come in the Telegram group if you need anything. I will let you know any trades I'm getting into or getting out of. Other than that, have a good one, and I will see you tomorrow morning, same time, 7:50.